Welcome to the Crypto Compliance Podcast by GateNox.
Well, it's my pleasure today to welcome Carole House to the first U.S. edition of Crypto Compliance that is being co-hosted with Luminous Group and GateNox. Crypto Compliance has been featuring prominent speakers for more than 2 years now, and I feel very honored as my first guest and my first hosting of the podcast, Carole House, who is a legend in and of herself in crypto and in Washington, D.C. Not an easy feat on either front. And with that, it's a pleasure to have you here, Carole. I know that there's some rumors that are floating around that you may be headed back into the government very soon, which is very exciting, I think, for a lot of us who've watched, what you've done over the years. So I thought maybe it would be a great opportunity for us to take a step back and talk a little bit about your history in the government. Your history predating the government, because you and I met a little over 2 years ago, I think, but we felt like we had known each other forever at that point.
Yes, that's totally true. I know. I heard of you. You were the other Carol that was talked about. It's funny, both in my cyber and in my crypto worlds, there were two, there were each a Carol that I knew of before I really got to meet and know. And so you were this titan that I had heard of in legal minds and policy thinking on crypto work. I know you were involved in digital currency work before cryptocurrency existed. So I was so thrilled when I got to meet you at that conference. And we just had a wonderful time talking for hours about policy.
I know, and it felt like we just we understood each other on multiple kinds of levels. But you have such a depth of understanding of both the technology and the public policy issues that I will admit far exceed my knowledge base. How did you get into this area to start?
Oh, I'm afraid, since you mentioned some of my background, I'll end up giving you more context than you than you may have wanted. But I've had an interesting origin story, and you're right. It starts from really predating my time in government, but the government has always influenced my life because I was an Army brat, like so many people that I know, moved around everywhere, had the international touch point, and saw just the life of being affected directly by national security threats. I learned to don a gas mask in under 10 seconds by the time that I was 12 years old, because we were stationed an hour south of the DMZ, the demilitarized zone in South Korea, the most heavily defended border in the world. That which also led to some very funny moments, including my family being featured in awkward family photos. I love my history, but my father was an Army colonel, and I was just completely shaped by by civil service. And my mother was an incredible volunteer all the time with the USO and MWR. And frankly, I was doomed for civil service from the beginning, I think. I always thought I was going to be in science and tech, like the math club president, science Olympiad nerd, with all the wonderful kids that were a part of that. But I decided that if I could serve, then I would. And so I did ROTC in college and commissioned as an officer. I was in chem bio rad nuclear defense. So that gas mask moment, which we had a picture all wearing gas masks in front of the Christmas tree that year. That's the thing that made it into the awkward family photos calendar. It was that was a funny omen that a decade later, I was going to be commissioned as a chemical officer. So eventually I worked in intelligence as a collection manager, all the assets that watch and listen to people. I promise this is germane later to how I got into crypto. After I came back from Afghanistan and got out of the Army, I went to grad school doing counter bad guy stuff all at Georgetown. And then I got the Presidential Management Fellowship and my first touch point into cyber, which was my first tour in the White House. At the Office of Management and Budget, we were standing up a cyber and national security unit, and I was overseeing federal civilian agencies' cybersecurity programs, and just doing incredible things and learning from an amazing team. And it's funny, I learned blockchain as two words, part of blockchain cipher encryption, essentially ways to encrypt large blocks of text. I remembered learning about blockchain is one word. And I was like, okay, you combine like this mechanism of encryption with distributed computing in a very rough like way that sort of combines into blockchain is one word. That was really interesting. When I did some details from the White House to Senate Homeland Security and then to Treasury, especially FinCEN, the AML regulator. Of course, everyone here who knows about compliance will know FinCEN, the Financial Crimes Enforcement Network. I asked them if they had a cyber national security unit when I met one of their other presidential fellows who was working in this bureau that hunts down money launderers and terrorist financiers. I was like, I must be a part of that. Do you go after cyber criminals? It hadn't occurred to me yet, the nexus between financial and cybercrime. So when you go to FinCEN working on cyber issues, you do crypto issues. Like there is a complete nexus. Cryptocurrency remains a cyber criminal's favorite way to launder or to request extortion payments, like via ransomware. It's a favored tool for purchasing exploit kits and other tools in the dark net. Like, so going to FinCEN really and seeing that nexus between cyber and financial crime is what exposed me to then getting to experience being in a regulatory office and actually doing regulation, and then also working in crypto regulation, two things that were once thought to be anathema to each other, but now we see the potential benefits that can come from the technology to enable regulation if you just implement it right. And then my most recent job in government was going to the White House again at the National Security Council under President Biden when ransomware was really picking up and there was a lot of experimentation starting to happen in central bank digital currencies. So I got to go there and be a part of that work and some counter ransomware work as well as digital identity. And then that was about 2 years ago. And now I've been out in industry doing really fun work with TerraNet Ventures. We've been incubating kind of a reg tech compliance platform in-house where I've been interim COO and doing consulting work and sourcing investment deals, just basically having all the fun, and still working with the think tank, the Atlantic Council, to do some policy work. So it's been a ton of fun. And as you mentioned, I'm so excited about going back into government service. If you get that call, and it's something that any one of us who work in the national security space, it's just it's not something that you can turn down when you get that call.
Well, you certainly played in your last stint an important role in the executive order that was issued by the White House relating to digital assets. Can you tell us tell us about that a little bit in terms of, how did that come together? It was an incredible document because it really dealt with a wide range of issues and handled them in a very sensitive way that we don't often see happening, I think, personally, in government, having watched it for many years.
That's fair. I hear the criticism of the absence of nuance that often comes in the discussion around crypto, and that's right. There's often a maturity model that comes to people getting exposure to crypto. Some of it really does depend on where you get exposure to it from. I came from the financial crime side, so my side was going to inherently like a lot of people in that world. They start off. First off, people like me, I was not a visionary who saw the importance of crypto. I wasn't the people at FinCEN a decade prior to my time there, or about 8 years prior, or I guess 6 years prior, who saw Bitcoin and recognized the need to update the money transmission regulations to cover value substituting for currency. I decided to change my whole career from just working in hard cyber to also covering illicit finance because of those amazing people. They were inspiring. It was wonderful and one of the honors of my life to work alongside them. But they were the visionaries. They were the people that saw that coming. I think I remember laughing at one of my soldiers who talked to me about buying this funny money called Bitcoin. And I was like, why would you want something that wasn't, backed by $1? That was not that was not my strong suit. It wasn't my domain at all when I was in the service. But anyway, so this natural evolution often starts from the illicit finance side. That's why law enforcement and anti-money laundering are often kind of the old guard in crypto. These are the parts that saw it first because that's where the issues mattered earlier. The amount of illicit finance and the type of illicit finance happening with crypto mattered earlier than things like stability risks mattered because it wasn't big enough to be a worry about stability and systemic risks. So that's not necessarily a failing. Like, of course, there's a long time period to get that capacity up and running, but there's a reason why AML is normally the place that things start. And then tax normally comes after that, because countries realize that they want their money. If commerce is happening, then they want some of those proceeds. But on the AML side, you start from ignoring it, like me in my initial story, and then recognizing, oh my goodness, bad guys are using it. We've got to figure out what to do about it. Is this bad? Like, this is where some people may feel that you need to ban it. Other people like, what do we do? And then eventually they recognize, these are all publishing to public unobscured ledgers. That's interesting. I don't get that with cash. I don't get that with Fedwire, with chips. Like, there's some real potential efficiencies here. Not everything is on the ledger. And there's some challenges and disagreement amongst the tools in determining where these things go. There's ways to obfuscate that, but it's certainly more of a record that I get than like cash, transactions of pallets of cash, moving around. So recognizing the fact that there is risk here. There's risk on the fact that you have kind of several of the key risks that are present for wire transfers and cash all existing in one instrument. The peer-to-peer nature of cash transactions, of me being able to send something to you without at least an intermediary financial institution, even if there maybe are some other third parties involved. But you get that feature, as well as the instant-ish, like cross-border reach of significant value that you can get with wire transfers and electronic payments all in one thing, which sounds very scary to people that want to fight illicit financiers. But then with the public record nature, you get a massive mitigant. So honestly, with these things, like major coexistence of two risk features coexistent in the same asset, but then also a major risk mitigant. So all of that just demonstrates the need for balance. And the need for balance, I think, was a major common thread in the executive order. Of course, I mentioned starting the counter ransomware campaign with an amazing team across the interagency and at the White House, under Deputy National Security Advisor Ann Neuberger, when I was there. Ransomware, again, like, this is an illicit finance problem, right? It's a cybercrime and a financial crime. So needing to deal with that, very exigent risk, massive national security issue. But then that also kind of opening the door to discussions and lots of things that were going on, and recognizing issues on competitiveness, and what the future of money looks like, and the BRICS and other adversarial nations, or just not as like-minded countries, thinking about what alternatives might be to a U.S. dollar denominated and heavily reliant upon system. Just a lot of issues on illicit finance, consumer protection, massive pervasive fraud, but also recognizing the need to drive competitiveness and the benefits of blockchain technology needing to be more fully explored for use cases outside of finance. It's a mix of things. The technology is not inherently evil or illicit. The things that are illicit about it are its use, and they're all based on the failures of people and businesses putting them into practice. So instead, ultimately, the president decided to issue this executive order outlining his policy objectives. This is guidance. These are technical requirements. These are policy expectations from the president of the United States, for the first time ever, coalescing the entire country and certainly the government around saying, this is what responsible development of digital assets looks like. And he had objectives around safeguarding financial stability, around driving U.S. competitiveness in tech, around mitigating national security risks and climate impacts, and protecting Americans and investors and businesses. So he outlined all those policy objectives, and then he set the interagency to work on a variety of different actions. There were certain action plans that were required for illicit finance. There were different assessments and strategies that were supposed to be developed related to things like consumer and investor protection, and then also the competitiveness framework that the Department of Commerce built. And then finally, at the end, there was also the president encouraging the Federal Reserve, which is an independent regulatory agency, so encouraging them to explore with the utmost urgency whether or not a central bank digital currency is in the US interest. Just recognizing the fact that over 100 nations worldwide are experimenting massively inside of CBDCs, and recognizing that the US wasn't really playing as significant a role and wasn't leaning in on some of those experimentations for a variety of reasons, including some very good reasons on the fact that we have the most to lose being the major global reserve currency holder. But I was so inspired by that guidance from the president, saying that with utmost urgency we needed to assess this, and this is going to be a years-long, decade-long effort of doing this R&D and assessing, is it in the interest, and if so, what does one look like? Is it wholesale and retail? There's a lot more problems that come with retail versus wholesale. Like, how would those things work together? What does modernizing the payment system looks like? But either way, the president gave a general policy North Star, and then gave us some very specific concrete actions to go implement to achieve that.
So where do you think we stand in that process? If it's 1 to 100, and you just said it may be 10 years to get to 100, where do you think we are, and what are the biggest challenges in getting to that 100%?
Yeah, and I appreciate that. We've joked before that patience was never a virtue. I was accused of having. So yes, we're like, it's certainly a lot of things did get implemented, including there was a framework that was published by the White House that leveraged a lot of the findings that came from some of the studies and reports across the interagency. We've seen certain outcomes from some of those things. Like, there've been the National Science Foundation funded, I don't remember if it was a consortium or like it's a major platform to support research and development across the crypto community. You're seeing that. You've seen DARPA forge partnerships on doing things like trying to mitigate illicit finance in crypto. You've seen a lot of efforts underway pursuant to the direction there. And the New York Fed, well, I'd say that it's not exactly CBDC or crypto, but they're now partnering at the BIS Innovation Hub in a Project Agora that's focused on tokenized payments. Like this kind of encouragement about like leaning in on figuring out and forging the partnerships and doing the R&D to figure out what does the future payment systems look like, and who are those key partners, and what is it that we can fix, what's the government sort of role and current positioning to fix, what's the right technology and governance structure to do so. All that stuff takes so long. So I'm encouraged that I've seen a lot of this really get started and get a lot of movement. So I think that there's certainly been progress. It is definitely still an effort underway, and it should be, right? Like, those kinds of policy objectives they shouldn't be controversial, and they're something that take a really long time to implement, especially with the wheels of government. So I think that there's a variety of things that are still underway.
Well, you've raised a number of questions that I'm not sure where to start to follow up on, but one thing that does come to mind is CBDCs, as you mentioned, central bank digital currencies. This week, it was announced that Saudi Arabia is moving away from the petrodollar. What are the implications for that? Not that we need to resolve that here, but thinking about CBDCs and the fact that that issue has become, if not a partisan issue, definitely a lightning rod issue, not only at the federal level with a resolution just passed in the House in the last week or so to prevent funding for CBDC development work. And at the same time, we're seeing several states have already passed legislation saying, not in my state, CBDCs.
Yes.
I guess I take a slightly different view of all of this, is that when the time comes, even though we're seeing those efforts both in the federal and state legislatures, if we have to, from a public policy standpoint, we'll get there on the CBDCs. But I don't know, what thoughts do you have on, are we hindering ourselves right now on a conversation that needs to continue to be had?
Absolutely. The extreme polarization politically in this country saddens me, and I think it has absolutely manifested in the microcosm of the discussions around CBDCs, and some of the legislation that has come out, including across some states, banning things that don't exist in practice, or certainly not in this country yet. I am saddened by there was some legislation that even in its name, it intimates that all CBDCs must mean a surveillance state, that they must mean Big Brother. And CBDCs don't have to mean that. The same way that cryptocurrency doesn't have to mean anarchy. These are not like the same nuance that cryptocurrency and its underlying technologies deserve and warrant is also deserved and warranted to the CBDC discussion. So basically, it's interesting to see one side get very upset about the other side's lack of nuance on the issue that they care the most about, but then they present the same kind of polarized view. And so I'm saddened by what I feel has been largely it's certainly been very politicized messaging. The reality of central bank digital currencies and crypto is that it all depends on how you implement it. And frankly, the United States, the U.S. Treasury, State Department, the White House, everyone has been completely consistent on messaging around, first off, that they're going to only move forward with Congress's support, but also they forged the G7 statement and principles on what democracy protecting retail CBDCs would look like. And privacy is always the issue for the most part that comes up. Occasionally it's about outcompeting industry, but for the most part, the major vitriol isn't even really about outcompeting and dealing with what's more realistic for the government to administer this option, or what's better for the government to administer it versus industry with stable coins. And there are some that that was their major discussion point, but in political circles that's normally not what it is. It's all assuming that if it's the state doing money, which it should do money. I'm not saying it does money alone. There is commercial money, there's commercial bank money, there's federal money, there's central bank money, there's a mix. These financial ecosystems are very complex and they have different forms of money, and we need to figure out what are the problems at each of those layers, and then figure out what is the way to move forward. The absence of the nuance in this leads to legislation that came out and it passed recently, where the Congressional Budget Office, a nonpartisan entity that's just supposed to assess what is the budgetary impact of these provisions, and highlighted that the language in there, the definitions are so broad that it may in fact outlaw existing central bank reserves that are digitally represented, and therefore prohibit the Fed from conducting monetary policy right now, which of course there are some politicians that feel that is a good thing. It is interesting. That's certainly not the way that it's being characterized to people, and not something that I would have advocated for directly. Something that I did not. But there were also other provisions in there, where it only preferred permissionless stablecoins. Permission stablecoins would may potentially be barred from having a relationship with the Fed, in the future, if that legislation were to pass. I don't anticipate it having any movement in the Senate, but that was a prohibition. It stated that crypto should have all the full privacy preservations and protections of existing cash. And that is also confusing language. The exact privacy features of cash are not the exact privacy features of any existing crypto at all. Certainly not Bitcoin that publishes to a public ledger, its transaction and amount and its provenance and destination. These are not the same things. So ultimately, there was a lot of inconsistency in some of this legislation. So, sorry to go into a deep dive on this one particular bill. I understand that it was more messaging and it was more political, and this is where the political messaging is unfortunately meaning that some of the legislative efforts are avoiding some of the more nuanced discussions on meaningful ways forward to figure out how do we give the North Star on what is the information that we think should be discoverable by whom and under what conditions. Because the answer is not Big Brother. It is not all information under any time that the government wants conditions. That's not the current system. That would in no way ever be a future system. And I'm also personally skeptical for at least a long time about the reality of a retail CBDC, simply because I see the challenges in the US with digital identity and things about consumer trust in our institutions. It would take a lot of research and development and trust building in our institutions to get Americans to trust using a Fed wallet, which is why ultimately it's probably an intermediated system, which also the Fed has been very clear on wanting for a CBDC. But even that even an intermediated central bank digital currency system was prohibited in that legislation. Even like the current system, if it went through retail banks and commercial banks like that, that was prohibited. So which I don't think is the reality of what we really want. I think that there's messaging, well-meaning and intended messaging from members that care so much about Americans' privacy on critical data that they're seeing harvested and sold all the time with no recompense to Americans, with no regard for the privacy of them. I just wish that Congress instead had moved on, let's say, consumer privacy statute instead of on hating on CBDCs that already, for the most part, require Congress to approve in the first place. So I also, by my read, I don't think that the Fed could do the thing that they're banning without Congress saying yes in the first place. So anyway, sorry, I know that was a long discussion. I'm on the advisory board for the Digital Dollar Project. So I love the work that they've been doing, looking at competitiveness in payments. And a digital dollar can be done in a lot of different ways, including with industry and with government. Figuring out what that right implementation looks like is going to take time.
Well, you've talked about identity a great deal here and the privacy related issues. And I know that this is something that has always been a tension within the crypto space is, the idea is that you've got a currency that would, a method of transacting that would allow you to do it without providing many of your personal details. At the same time, on the regulatory front, we still need a lot of that information to be able to comply with existing laws, for example, the travel rule. Do you see any solutions near term or further out that may help us bridge this divide from a need to collect versus need to know versus I don't want them to know anything?
Yes, I am so glad that you brought up the identity point, because you're right, it comes up everywhere, certainly in the future of money, and it really is one of the building blocks of a future digital economy. I think there's three. There's probably more, but I would say it's data or information, the infrastructure and tech that we rely on, and then identity, the way that you establish trust and identity across devices, people, businesses. In these future digital economies is critical, and we didn't get that right in the initial internet. We've patched it together with some updates and fixes to protocols and things, but ultimately we need, and it's not just the internet, it's just generally the fact that we've got a lot of things wrong with identity in this country, but also globally. Absence of access to identity documentation is a major cause of a lot of people globally being unbanked. That's not the major cause in the U.S., but there's other issues in the U.S. But like that is a major global issue, and especially for technologies that have massive global reach, it's very important in crypto in trying to establish that there's an identity, what it is, that it is real, and that it belongs to that person, which are like critical steps and components of any effective KYC program, and certainly CIP obligations for banks. There's a lot of experimentation in it, similar to how the crypto conversation has evolved over time. The identity conversation has evolved in the Web3 space. It's been interesting to see lots and lots of experimentation and growth, I think really driven by the issues of the travel rule, and recognizing that, as well as pervasive fraud, really providing the impetus to industry to want to figure out how to get identity right. I think that there are a lot of people doing experimentation in cool privacy enhancing technologies, because with identity, you can't talk about identity without privacy, or privacy without identity. The issues the places where I'm seeing still need for maturization in the space, and I'm hopeful that that's part of the glide path and the roadmap for development here, is that people will say things like zero knowledge proofs and homomorphic encryption and be like, well, that's going to solve everything. So the government doesn't need to know the underlying data. Like, I can just verify that I'm not on a sanctions list or on the SDN list, the specially designated nationals list that our sanctions office, OFAC, administers in the US. And that's not what KYC is. That's not even compliant with sanction screening obligations. Exactly. Sanction screening is tough because it's strict liability. So even if you don't know that they're a sanctioned actor, you can be guilty of sanctions violations. So I know it's a tougher thing, but OFAC has been very clear on emphasizing to companies to put in place a risk-based approach. So which is similar to FinCEN's risk-based approach requirements for anti-money laundering programs, including KYC obligations for money services businesses like crypto exchanges. So I think there that those who are trying to figure out what is the identity solution, often they either think that they're the complete answer, or I'm seeing more recognition of okay, I provide this exact element. I am one tool in a suite of tools that is a part of KYC. Knowing that you're not a sanctioned person, it is a critical part of KYC. It's just not all of KYC. Part of KYC is potentially having the information so that you can retain records to comply with things like the transfer and travel rules in the US, which basically those are two separate rules. I know they sound like the same thing, but basically it's the record keeping rule and the travel rule of sending the information to any counterparty financial institution that ultimately sort of make up the FATF travel rule. The FATF travel rule covers both of those rules underneath its international standard. So I think people are starting to recognize the fact that they need to see these as little different components, and that companies and anyone who wants to create the architecture of an entire KYC solution needs to understand what the different elements are of KYC. Things like enhanced and customer due diligence based on, if it's a higher risk client, and collecting and retaining certain information and doing, critical checks. And then also doing broader monitoring, part of knowing your customers, knowing their risk profile, and that broader transaction monitoring program, which is where sometimes some of the identity solutions end up falling a bit short when they paint themselves as KYC in a package, like a KYC in a box. KYC doesn't work in a box. KYC has to be considered as a part of more broadly the transaction activity and anything else that would feed your understanding of the risk profile of the customer. Now, again, I think that a lot of these technologies can help solve these problems and be done in a way where you can minimize data, which is a critical part of any privacy framework, minimize certain data collection or minimizing its discoverability or disclosability until certain conditions have been met, like detection of something that triggers you saying that looks suspicious, whether a touch point with some kind of sanctioned actor or activity or darknet marketplace activity or whatever it is that would make you think that it's suspicious. But you have to have the governance structure and the process in place to be able to get access to the underlying information, because that's part of the point of illicit finance regimes, is to allow for those authorities to be able to come in and then to do something about it. So anyway, there's a lot that needs to be done. Certainly, I feel that the government is on the hook for a lot. The government is the authoritative owner of a lot of identity credentials and attributes that only they know, and that industry has to guess at a lot in KYC programs. And I do think that there's a lot that the government can do to support and enhance and accelerate issuance of verifiable credentials and mobile driver's licenses and privacy preserving attribute verification services to regulated institutions and other things that will help institutions get a better sense of yes, this identity is in fact real, and I know it from the authoritative source rather than from a lot of tools that have a lot of synthetic identities in them. Often they're flagging that these are synthetic identities, but it would be nice if the government, as the authoritative owner, I think could do. There's a lot of room, I think, for the government to be able to help support building identity as one of those building blocks for digital economies and as part of its critical infrastructure.
Once again, you've opened the door on a number of different issues, and sort of coming back to the beginning of your presentation, talking about the DMZ. I mean, one of the issues I run into all the time is having a conversation with someone, not necessarily a regulated FI, financial institution, but just an average company, to say, what are you doing with respect to sanctions? And the first response you'll get is, well, we don't do business with anybody outside the United States. That's their opening line, and then we'll refine those statements as we go along. But as you said, a strict liability regime, and it applies to all U.S. persons. So whether you're a citizen or a resident in the U.S., or you're just even visiting here. So back to the DMZ, in the last month, we've seen the U.S. government put out some guidance and advisories on hiring IT workers who are remote. because there are an influx of resumes coming from North Korean IT people, all part of the efforts of the North Korean government to try to evade sanctions, generate hard cash revenue. Interestingly enough, someone I think both of us know owns an IT company and decided to post a job and see what came in the way of resumes. And it was for a U.S., a remote worker for a U.S. company, and 70% of the resumes that came in were traced back to North Korea.
Wild.
Yes,
I see that number. That's
absolutely wild. So that I guess everyone needs to have a certain level of vigilance, and we need to be working on bringing that level of knowledge up across the board. But
yes.
Your comment in terms of the government, providing greater data. I know today, in fact, I think you posted on LinkedIn an article that was just published in Bloomberg, and I tried to read the article. I only got past the first 4 or 5 paragraphs because it was behind a paywall. Maybe you could tell us a little bit more what that was about.
Oh, sure, absolutely. And yes, I love that you brought up this issue of IT workers, because it demonstrates a lot. It's certainly North Korea's preferred mechanisms for trying to build this external wealth, right? Because we have very comprehensively shut them off from the international financial system in a lot of ways. There are still places that they have touch points to, and where FinCEN has historically taken action against some institutions responsible for that. But ultimately, things like forced labor, IT workers infiltrating our supply chains and posing as other East and Southeast Asian individuals who, providing IT and computer services, and then cyber and crypto heists. In fact, the White House highlighted that about half of the proliferation activities of North Korea have been funded via cybercrime and crypto heists. So, which is a massive number. That is not an irrelevant number. This issue really emphasizes what was a part of what was in this article, even though the article was focused on the national security imperative and the need for U.S. industry to recognize that the efficiencies that autocracies have, for nations like China, the efficiency that you get as an autocracy to be able to direct, as the state, the entire resources of industry towards a 20-year-long vision of competitiveness, and to drive with the cogs and the power to move all the wheels of your industry and your nation towards this 20-year, decades-long Belt and Road Initiative. That's not what democratic economies have. We have a lot of inefficiencies deliberately built in to prevent things like tyranny, but the inefficiencies of budget processes, of political turnover and conflict, of long procurement cycles, all built in a lot of ways necessary to preserve our freedoms and to prevent exactly the tyranny that this country was founded to avoid. But that means that democratic economic statecraft is, in my view, as I outlined in the report, in the article, the democratic economic statecraft is positioned to scale industry scalability, not state scalability. That's where we need industry to come in. The whole point is that trying to highlight the lessons that we had from industrial mobilization of the 1900s and seeing U.S. industry and economy rise to the occasion, including, I think, the only direct commission 3-star general in the history of the military was an automotive executive who brought in business expertise to transform the economy and drive industrial mobilization that ultimately saved the free world. That is brilliant and wonderful, and we need more of that. We need lots and lots of those types of leaders brought into government, advising government, engaging with them as part of industry councils, but whatever it takes to galvanize and rally industry and recognize, the same way that we've seen in impact investing and other types of investing for responsible corporate practices, when major CEOs announced at the Business Roundtable this statement that corporations should be developing an economy that benefits all Americans. All the efforts and principles that were in there, super important, and issues around sustainability and inclusivity and other responsible corporate practices. National security must be one of those objectives and should be seen right alongside those other ones. We must figure out how to point US industry and investment towards these national security areas of extreme interest for us to help us compete on the future state of financial warfare and economic warfare that is absolutely coming. A lot of it's driven by digital competitiveness and warfare as well that's going on. These things are all integrally linked with each other. But the things that make the US special, besides our democracy, when you have China trying to paint US liberal democracy as a failed experiment, I'd like industry to show them that's wrong, to rise to the occasion like we have before, and to mobilize the efforts that we need to invest in trust and safety technologies for these massively scalable technologies that need responsible guidance and growth, and that other countries will not have the incentive to do. And where especially timelines for technological adoption have just shortened massively. You used to have a decade or two to be able to adopt. Now you've got about a 2-year runway. Exigency is real. Timeliness is real. Government has been doing a lot to try to subsidize and enforce bad actors and take action to mitigate China's unfair trade practices. But we need industry to rise as the counter to autocratic economic statecraft, because democratic economic statecraft really relies on our industry and free markets. So anyway, that was the major point of that article. I know I think I recited the whole thing probably, but this key issue, I do see financial competitiveness and work around digital assets developing responsibly, but also competitively as a major feature and function in any strategic approach like that.
Well, if I could put a little bit of a plug in, because I saw the first line was we need to change the calculus. And I actually did a presentation about 3.5 years ago on changing the calculus, and it was private public, but it was in the context of compliance. That right now we've had many organizations have built up very credible compliance operations, are putting a lot of money, a lot of time, a lot of effort in, and that's being used to support governmental actions that are necessary where there's criminal activity. But the problem is that these are run as a cost center. And is there some way that we can start to think about how we can move that if to a cost neutral, if not a cost positive perspective? And I think in crypto in particular, given the fact that you need highly trained people to be able to do compliance in that area, plus with the cost of the investment that's necessary in the equipment, et cetera, and the time, how fast things are evolving, that you really do need industry input on a day-to-day basis. So little plug there for pet project. You've been very generous with your time. I do have one other set of questions for you related to your efforts on the CFTC, Commodities Future and Trading Commission subcommittee on technology, is it? Hopefully I've got all the names correct, but you've been co-chair.
Yeah, it's the Tech Advisory Committee. I chair that, but I'm also the co-chair of the subcommittee on DeFi. So absolutely.
So turning to the DeFi piece, so you came out with a very important paper a few months ago. I guess maybe can you tell us a little bit about that paper, how you see that sort of in the grander scheme? And I know that about the time that paper came out, there was another paper that came out that was authored in part by a former head of FinCEN, taking an interesting perspective on some of the issues that are near and dear to you. So maybe if you can give us a little bit of Carol's views on where we're headed with DeFi.
Yes, absolutely. And I love, I definitely loved all the members of the TAC, the Technology Advisory Committee, are amazing. And our subcommittee on DeFi was just full of some like real heavy hitter, big thought leaders in this space, in finance forever, and in markets. My co-chair, Dan Ari from Cornell, is just one of the smartest people that I know. And he's absolutely brilliant on these issues and was fantastic to work with on this report. This report was kind of our like magnum opus to CFTC on all the DeFi issues. Basically, we attempted to come up with a working definition of DeFi. Also in the same text highlighted the challenges with doing so, and that like that definition really doesn't work very well in translating directly into like a legal standard, because there was an operational or functional definition, and then more more like legally and regulatorily, where the questions around DeFi normally end up being around like, how decentralized are you? What is decentralized enough? And we highlighted that decentralization exists not as a 0 or a 1, a yes or a no. It's on a spectrum, just like levels of security, levels of immutability. All these features are not, they're somewhere on this axis. And with DeFi, you have so many different axes. So on the functional side, you have things like operations and balance sheet and governance and development, all of which can be like, each of those are different dimensions that can be very decentralized or very centralized or in the middle. And then on the technological side, the way that it's actually implemented, you see it through things like DAOs and smart contracts and Oracle's use. Basically, when you have that, when you're trying, imagine regulators trying to paint a line that somehow weaves across every single one of this now, like not even just two axes like X and Y. There's like 10 dimensions that you're trying to map, where you're somewhere on this spectrum from 0 to 1 on fully decentralized or fully centralized. It's really like impractical to come up with this line. I think regulators would generally view that as the line for arbitrage, of like, where once you paint that line and once you state that, then that is exactly where industry wants to point, to be right on the other side of it, because that means accountability, that basically this envisioning that there's no accountability once you're past a certain level of decentralization. And then industry would call that the line of clarity, because not providing any clarity on this means like, what, you're going to regulate everything, even when you've got self-optimizing smart contracts that are just software propagated? Like, who are you going to actually go to and take this down with? So this issue, this difference of worldview, we presented and dissected it in the report and highlighted the challenges. The challenges are, the biggest challenges aren't even with the policy, it's with the implementation and the enforcement that come of it. I can write a policy all day that defines a line, but actually applying it in a case and like in a facts and circumstances, case by case basis is really where that's where the work comes in. Yeah. That's why our actions take so long. But we examined that. We looked at all the different potential opportunities and goodness with DeFi. We didn't just look at the risks. We also then looked at the risks, which Dan points out. He's so brilliant on this. He was like, this is basically just a mapping of all financial risk, because that's what you have when you're examining a general purpose technology. We highlighted the different ways that it can present risks, but the risks depend on what you build in. I could build a DeFi compliance coin that was completely built in to publish your PII publicly on a ledger all the time. Now that's horrifying from a consumer protection perspective. So compliant in one way and not in another. But basically, we highlighted that technology can enable compliance. We even mapped the different layers of the tech stack in DeFi and highlighted the function, the different entities that tend to exist at each layer, which is important when regulators are thinking about where obligations should exist, like who are the players, what are the entities, what are the objects or assets that exist to potentially regulate. And then we highlighted a variety of different compliance tools and capabilities that we see available at each of those layers. That it wasn't meant to provide like an answer, and it's not that you need all of those things. We were just demonstrating that compliance is possible. You can use technology to meet these needs, and you don't have to just rely on the application layer. I personally I feel that application layer makes a lot of sense. That's where exchanges typically sit. They're the ones interfacing with all the consumers. They've got all the data, like for the most part, and they're the ones making a lot of the money. But frankly, there is a lot of data at the other layers too. And especially in spaces that, like, a lot of DeFi's argument is that they're made in order to not need to have to rely on these other third parties and to allow for these peer-to-peer transactions. If you've created an electronic peer-to-peer system where there is no application, they're just using and writing your infrastructure, or you're operating that network and you're validating the transfers. You're choosing to validate the blocks and the transfers with an address that was publicly known, and the government went through their efforts and their, like, the tough work and guardrails that they have to go through, all the lines of work that they have to go through to publish publicly that this was Lazarus Group and North Korea. Like, this is it's this issue of like that there's reckonings that are coming, not saying that all those layers I think are likely to be regulated or that it's even near term. We were demonstrating a roadmap and outlined how regulators could approach looking at DeFi, what kinds of steps and measures that they need to put in place to figure out what is the right regulatory approach to move forward, and then also demonstrating to industry that like accountability isn't going to go away if the future of decentralized or of digital economies is built on decentralized infrastructure. Accountability must sit there. And that's not just because it must, because the government says so. It's also because that is critically needed for a functioning and stable economy and for consumers to trust their sector. So compliance is a part of building in that trust and that societal good and norm. I'll close by, it wasn't directly in the paper. Oh, no, actually, I think it was. Never mind. Sorry. In the paper, we talked about that there are people that take these views that feel that infrastructure should not be directly regulated, that the infrastructure is a layer that should be off limits and it should be credibly neutral, basically adopting terms like net neutrality into the crypto space. And the difference there is that like internet activity is not equivalent to financial activity. 200 jurisdictions that are members and subject to the FATF requirements and obligations have assessed that, you know what, credible neutrality towards terrorism financing is in fact not a credible position. So that credible neutrality is non-credible or uncredible. Incredible doesn't seem right, but basically that's the way forward. So anyway, sorry. Again, that was what was in our paper. I know the paper that Mike Mosier and Rebecca Reddig wrote, and I'm so excited to see really smart people try to provide other big ways of thinking about how to think about the future of DeFi. They presented a potential framework for things of like calling it critical infrastructure. It seemed to be kind of a voluntary like info sharing partnership, and then to work with Treasury for part of that oversight. I would say personally that I think that they did a really neat job outlining some of especially the ways that DeFi end up working on the policy structure and way forward. I love thought leadership from anybody who especially as smart as those two. I think these are not an either or. Like in my view, in fact, actually most crypto and blockchain platforms are critical infrastructure. It's actually not. It's not an opt-in approach. It's that you just are part of this sector. And in the DeFi report, we highlighted the ongoing policies that are policymaking that's currently happening for infrastructure operators. Whether it's financial or not, infrastructure operators being covered by some regulations coming out of commerce to impose KYC obligations on infrastructure, as well as infrastructure as a service, and then critical infrastructure cyber incident reporting coming out of CISA, the cyber agency for the US. So again, I really liked all these things. I liked the DeFi report, which was much longer, did outline these other, like the fact that there are still obligations for you, even if your infrastructure accountability, like, is probably not going to be able to be voluntary simply because, I mean, even when these things have been obliged to implement these requirements in finance, they have not complied strategically for a decade and a half of existing. It's hard to see voluntary being that future, especially when it's critical infrastructure. We rely on this. And whether I like all of the efforts or not, there's a lot of different policy efforts that are ongoing to impose obligations, like potentially on software, certainly on infrastructure, on lots of different components. There's feelings on both sides of the political aisle about changing things like Section 230 and platform operators. Like there's bipartisan interest in figuring out, as we get more and more digitized and things become like more efficient in their reach and their exploitation and their use, to figure out how accountability looks. So I do think that more discussions around what meaningful accountability and then regulatory oversight for that accountability look like, that can be self-regulatory. It doesn't have to be the government. But we haven't seen a lot of SROs or arise out of the cryptocurrency space. Decentralized communities have a hard time organizing. But I do think that can be part of the future. It certainly could. This is, unless you consider a DAO an SRO. I'll bet some people have made that argument, but that would be an interesting argument to see. But anyway, that's I feel that both the infrastructure paper as well as the DeFi paper that pointed to all these things kind of they all have accountability as an underlying feature, and I really did appreciate that in their paper. And there have been a few other things that have come out too that are trying to provide some really interesting new frameworks of thinking about how accountability can look in that future decentralized ecosystem.
Well, you've been very kind with your time, and I'd love to do a lightning round of about at least two, if not three questions. One of them is very timely in that the commission, the CFTC commissioner who has been, I think, overseeing the efforts of your committee is regarded as being, I guess, has been nominated officially by the White House to become the next chair of the Federal Deposit Insurance Corporation, which is a key regulator for the banking industry. Obviously the banking industry has been it's been a little bit in handcuffs over the last several years in terms of its ability to move into the crypto space. I'm not sure it's fair to ask you for prognostications as to where we would see, if in fact the commissioner becomes the next chair, how the work that she's done at the CFTC might flow into the banking industry.
Yeah, you're right. I will be so curious to see that. I was thrilled to see that news. Christy is phenomenal, and she's been really engaged on all the different emerging tech issues and driving a lot of the operational resilience work that was happening at the CFTC, and then the work at the TAC. I think there was just great vision from her in reconstituting it and directing us in these different directions on cyber, AI, and DeFi. So I'd say Christy is not afraid of tough problems. So I'm hopeful about her going over there, about doing some really exciting work.
That's great. And I guess as a closing question is, if you're looking from whether you look at a Washington perspective generally or look at Hill versus administration, what do you see as the three biggest challenges for the crypto space in the coming months and I guess possibly next couple of years?
I'd say that the complete polarization of messaging on both sides, I certainly feel that I've seen a lot of legislation that's been very thoughtful on both sides, where voices start to get really polarized and polarizing. I think that's a place where I wish and hope that industry would come to try to help bring things into the middle and highlight that responsibility does sit in there. And I think a major challenge that industry has is an optics problem. That's the second issue, which a lot of it is that industry comes across as extremely defensive, and they have been overly defensive of things that honestly should surprise me for them to be defensive of, and are things that I found very hard to be defensible for them to be upset about and frustrated. And so ultimately that optic issue led to even a moment where certain figures were misunderstood and misinterpreted in a particular news source about the amount of terrorism financing happening in crypto in a particular instance. Then an industry that had been overly defensive for too long, even if being rightfully defensive, it was kind of too late. Like the image and optics issue of the industry has really not changed and evolved a lot, and it doesn't help to me that I guess I feel like a lot of the messaging from industry that's been very successful and galvanizing tons of support for it, but is also misunderstanding what is actually the US framework. Like a lot of things that say that, oh, well, MiCA is so great. And I feel like, well, actually most of MiCA is just getting the EU to where the US has been for a decade at least. There's a couple things like clear pathway to registration and other stuff that I think are maybe a little bit more clear in the EU space than maybe in the US. But most of that, I don't hear industry going out saying that, yes, this is finally the rest of the world catching up, so that our competitive advantage from having been regulated in the US will be beneficial there. And I'm not saying that the US framework has been perfect. There are certainly areas, especially related to prudential regulation, that are ripe for action on either providing clear pathways for, or really, I guess it is all about clear pathways and direct regulation and oversight, because we don't have enough of that, especially for stablecoins at the federal level in the US. And then us figuring out whatever the right balance is between supporting economic function-based regulation, but also a clear pathway to operate in the US. These are some of the, I think, the tension points that have to get navigated, but the really polarized messaging that often the industry like echoes is not helpful to have the conversations, because the people, many of those behind how to fix those are in the on the regulatory side. That messaging tends to land more on the Hill side, but often that makes a lot of moderate members, or even just members that recognize the need for nuance, they end up confused at like what is actually wrong with this legislation. Like there's been a lot of vitriol in reaction to certain legislation that I like was shocked by, because there like an earlier iteration of some of those same provisions was not something that industry had gotten upset about. So I don't know. I think that clarity of their own positions, the clarity of the clarity that they want, something that I've often asked and not gotten answers from in industry, the optics issue, and then this polarized messaging, hopefully like becoming a bit more deep and detailed and nuanced to come to the table with, and here's the answer for what that accountability can look like, demonstrating them as, okay, we chose one of the highest risk use cases as possible as the first use case in this space, finance. Here we can do this responsibly. Here's what that looks like. That's something that I really hope that industry will be able to navigate better, and government also coming to the table with when that is what's on the other side.
Incredible. You've given us a lot of food for thought here. On your last point with respect to MiCA, there's certainly been a lot of press in the last couple of weeks about how increasingly it looks like it's going to be very difficult for MiCA to get implemented in a timely fashion, whether it's the June 30th deadline or the end of this year. And it harkens me back to statements I've made on more than one occasion, is you have to be careful what you ask for. And I know that a lot of people in the crypto space have looked to MiCA to be a panacea, but I don't think it's proving to provide that pathway for us. So very much appreciate your comments on that point. Also point out that for those who are listening to this today, that Crypto Compliance has just posted in the last few days an in-depth interview with a leading European official working on MiCA. Yes, so you find that of interest. But Carol, this has been such an incredible pleasure. I think we're all looking forward to hearing about the next chapter in your life. Looking forward to working with you as you move forward into that next chapter. And I can't start to express my appreciation for you joining us today, and I think giving us a year's worth of things to think about.
Yeah, thank you so much. It's been an honor, and I'm looking forward to chatting more and seeing more of the great insights that you have. And thank you. I'm also looking forward to my next chapter. So what a way to end it.
Great. Thanks so much.
Crypto Compliance, brought to you by Gate Knox.